you're going to get inflation running at far higher levels than the current level. I personally think that this is something which is going to be exacerbated even further because foreigners, it just so happens, don't want any more dollars. And the fact that silver is outperforming gold really dramatically is a reflection of the lack of liquidity relative to gold in the silver market. This tells me that this is a bear squeeze, even though gold is close to all-time highs. I mean, this is bizarre. In other words, the system, the bullion banking system, has been caught with its pants down. This is something which I think could well develop into a crisis for one or more of these bullion banks.
You're watching Silver News Daily. Subscribe for more. Silver's looking pretty hot right now. Demand is skyrocketing due to its key role in green tech like solar panels and electric vehicles. And with supply not quite keeping up, prices could really go places. Plus, with all the market ups and downs, silver is shining as a safe investment. But why is silver so crucial, and what could drive its price even higher? ALISDAIR MACLEOD has some compelling insights that might just change how you view this precious metal. Stay tuned to find out more.
Attributed to the decline in bond yields, the expectation that interest rates will start falling later on this year, all that sort of stuff takes pressure off the banks, and so the problem is gone away, sort of thing. But there's signs that this is coming back. We see that bond yields are generally rising again. They have yet to get to the levels which we saw last October. I mean, the US Treasury, 10-year Treasury, for example, I think just touched 5% last October. We fell to around about 3.75%, and currently we're looking at 4.58%, something like that. So you can see that they're on the way back up, but perhaps not in crisis territory yet. The interesting one is the Japanese government bond, the 10-year. The Bank of Japan has tried to sit on yields there and to stop them rising. Their target, believe it or not, was 0%. So it's now 1.08% as we do this interview. This is the highest it's been since 2011. So you can see that this is putting a lot of pressure on a system where there is an awful lot of debt whose value is falling. Perhaps not quite at the pace we've seen in other jurisdictions yet, but it is definitely falling. It's undermined completely the Bank of Japan's balance sheet. I think also is creating problems for zombie businesses, because when you have ultra low interest rates and businesses take advantage of it, they don't actually think that at some stage these rates are going to rise and they're going to have to refinance. That is now happening in Japan. It doesn't sound dramatic to us, the idea that, say, a major corporation has found that the rate of borrowing has risen by 1%. But bearing in mind that's probably risen from 0.25% when interest rates were negative to currently 1.5%. This is beginning to have a pretty big impact.
To really grasp why silver is on such a hot streak right now, we need to take a quick look back at its historical trends. Over the years, silver has seen its fair share of ups and downs. Historically, periods of high demand have often led to significant price increases. Remember the silver boom in the late 1970s? Prices soared due to a combination of high inflation and market speculation. Fast forward to 2011, and we saw another spike, driven by investor demand during economic uncertainty. These historical trends show that silver has always been a go-to in times of market instability. And now, with the world pushing harder towards green technologies and clean energy, silver is once again in the spotlight. This time, it's not just about investment. It's about real-world industrial demand driving up its value. And that's what makes the current situation so unique and exciting for investors.
40% of the banks went bust. This was very, very serious. And, not only America, but the whole world was driven into a depression as a result of these trade tariffs. Because, when America introduced the Smoot-Hawley Tariff Act, Other countries introduced their tariff acts, in response. It completely screwed American industry. Importing stuff, sort of, if you like, vital components for manufacturing. The tariffs jacked up their prices as well. I mean, the whole thing was just complete nonsense. We are going down exactly the same route. I mean, the things are slightly different, admittedly. This is an attack against China, but it will spread around the world because other countries, like the EU, will not want China to dump EVs into the EU. So they're going to raise their tariffs as well. So you can see that this is something which becomes a tariff war. China herself is bound to start raising tariffs against American imports into China as well. And then consider the position of companies with supply chains going into China, like Apple, for example. Actually, all their iPhones and stuff are manufactured in China. What's that going to do? It's going to kill these businesses completely. Now, I haven't monitored the share prices of these businesses, but if they haven't really gone down, then as this works through, they will be very, very badly affected. So this is the ridiculous thing. What it does is it drives up prices. It drives up prices from the production cost end, and either businesses manage to get the prices to stick, or they go out of business. So what does the government do? If big businesses start going out of business because of these tariffs, they will merely support them. And they will merely support them because the banks will go bust as well if if large manufacturers in America are allowed to go bust because of these damn tariffs. So the whole thing is absolutely crazy. The consequence is that not only will you see from the monetary end the debauchement of the currency, debasement of the currency, driving prices up, but also from the tariff end, you'll see them being driven up as well.
Today, silver's demand is being propelled by some of the most transformative technologies of our time. At the forefront are solar panels and electric vehicles, both critical to the global shift towards renewable energy and a greener planet. Solar panels, in particular, are a huge consumer of silver. Every photovoltaic cell used in solar panels relies on silver for its conductive properties. With the solar energy sector growing at an unprecedented rate, demand for silver in this industry alone is set to soar. Similarly, electric vehicles, EVs, are another major driver. Silver is used in the electrical components and batteries of EVs due to its excellent conductivity and resistance to corrosion. As countries around the world push for greener transportation solutions, the production of EVs is expected to skyrocket, further boosting silver demand. Beyond these, silver's role in electronics cannot be overstated. From smartphones to laptops, and the burgeoning field of 5G technology, silver is a critical component. The electronic sector already accounts for a significant portion of silver consumption, and this is only expected to grow as our dependence on advanced technology increases. So what does all this mean? Simply put, the growing industrial demand for silver, particularly from these high-tech and green tech industries, is creating a robust foundation for its market. This isn't just speculative demand, it's a real, tangible need that's likely to keep rising. And with supply constraints coming into play, the stage is set for some potentially significant price movements in the silver market.
On the viability of these businesses. So the Bank of Japan, I think, is on the verge of having a developing crisis. I don't think 1.08% is quite enough to tip the whole system under, but there is no doubt that the yield is rising and will continue to rise. If you look at the yen-dollar rate as well, that is rising again. I mean, the number is rising, which basically means that the purchasing power of the yen measured in dollars is falling. We're currently about 157, I think, having hit a high recently of 160 before backing off. So that, I think, is continuing to be a real problem for the Japanese. And at some stage, if things continue in this direction, I think they probably will, then they're going to have to take some pretty strong action to try and stabilize the currency. because the price inflation effect of a falling currency is going to start destabilizing bond yields even further. So this is a difficult situation, and I think that if you like, it's the first canary in the bond gold mine, or the bond mine that we're seeing. Talking about gold, I think I haven't monitored it, but I wouldn't be surprised if the Japanese are buying gold as well, because they must be looking at this. Japanese investors, who again are big savers, not as much as the Chinese, but they're big savers. They must be looking at this and thinking, we better have some gold, better have some silver. Probably gold more than silver, but this is the idea of Mrs. Watanabe actually just leaving her money on deposit at the bank is getting less appealing to Mrs. Watanabe, I think. So, I think we're seeing the first signs of this beginning to be a problem, and I think it'll accelerate over the summer. And you know what? The oldest...
While the demand for silver is rising rapidly, the supply side of the equation is facing significant challenges. This imbalance is one of the key factors setting the stage for potential price increases. Firstly, silver mining is not keeping pace with demand. The process of extracting silver from the earth is becoming increasingly difficult and expensive. Ore grades are declining, meaning that miners have to process more rock to extract the same amount of silver. This not only increases costs, but also slows down production rates. In 2023, we saw a 2% decline in mine production, even as industrial demand was at its second highest level on record. Moreover, the recycling of silver, which accounts for about 15% of the total supply, is not expected to grow significantly. Recycling efforts are facing their own set of challenges, including low profitability at current price levels and logistical issues. The attractiveness of pulling silver out of existing products is hard to justify economically, particularly with the additional complexities and costs involved. Adding to the complexity, bringing new mines online is not a quick or easy solution. It involves navigating a labyrinth of regulatory hurdles, securing funding, and often overcoming local opposition. According to a survey by Bank of America Global Research, the top 13 silver producers do not anticipate reaching their 2016 production highs anytime soon. The constraints of funding, permitting, and constructing new mines are substantial and growing. On top of these mining and recycling challenges, there are geopolitical factors at play. Many of the world's silver mines are located in regions with political instability, which can disrupt supply chains and lead to further production shortfalls. In summary, while demand is surging, the supply side is struggling to keep up. This imbalance is a critical factor that could drive silver prices higher. With production hurdles and limited recycling growth, the market is poised for potential supply shortages. Investors and industries alike are watching these developments closely, as they could significantly impact silver's availability and price in the near future.
The consequences of the budget deficit and how that feeds into undermining the purchasing power of the dollar. The other thing that it does, it actually conceals what's going on in the real economy, because if you look at the budget deficit for this year, it's going to work out in the region. It's been running in the region of about 9%. If you look at GDP, that has been growing by something like 4.5%. So 9% minus 4.5%, 4.5% minus 9% tells you that the private sector is actually contracting. So the idea that the US economy is looking jolly good and, lots of demand and all the rest of it, particularly when unemployment figures are continually being revised upwards, unemployment, that is, employment, you can see that all is not well in the American economy. And I have to say that it's the same situation in the UK and also in other jurisdictions. The point about the debasement of the currency through government spending is something which I don't think people are paying too much attention to, but it's a very, very simple thing to understand. What is less easy to understand is the impact of trade policies on inflation. President Biden, as I understand it, is introducing or has introduced a 100% tariff on Chinese imports into America of electronic vehicles or electric vehicles. There are various other high-tech products coming out of China which are deemed, if you like, to be undermining of US manufacturing businesses, which are similarly being taxed, not at 100%, but up to 50%. Now, the consequences of this basically are the consumer faces higher prices. It's as simple as that. But we can take it one further and just look at what happens when you raise tariffs by a significant amount. And the example we have, of course, we go all the way back to 1930 when President Hoover signed into law the Smoot-Hawley Tariff Act. Now, the consequences of that were to drive the US economy even deeper into the recession. You had 25% unemployment, you had a 36% collapse in GDP, or the economy, if you like, because they didn't have GDP in those days, and you had a 40% collapse in the number of banks.
One of the most intriguing aspects of the silver market right now is the paradox of high industrial demand coupled with an overall decline in total demand in 2023. This might seem contradictory at first glance, but let's break it down. In 2023, the total demand for silver actually fell by about 10%. This decline was primarily driven by significant drops in the jewelry, silverware, and physical investment sectors. For instance, jewelry demand, which was exceptionally high in 2022, dropped by roughly 50 million ounces. India, which had a massive buying spree in 2022, reduced its silver purchases significantly in 2023 as they had overstocked previously. Similarly, the demand for silverware saw a notable decrease. The most substantial decline was seen in the physical investment sector, which fell by about 70 million ounces. This sector had seen record demand in 2022, so the drop in 2023 can be viewed as a correction rather than a collapse. When combining the drops in jewelry and physical investment, it accounts for an overall demand reduction of around 12%. However, this reduction in certain sectors doesn't tell the whole story. The industrial demand for silver, particularly from the solar and electronics sectors, remains robust and is expected to continue growing. The key takeaway here is that while some traditional sectors have pulled back, the long-term industrial demand trend is very positive. Peter Croft, editor of Silver Stock Investor, highlights that this situation reflects a correction after the outsized demand of 2022 rather than a collapse. The underlying drivers of silver's demand, its critical role in green technologies and electronics, remain strong. This correction is a natural part of market dynamics, where extraordinary peaks are often followed by periods of adjustment. Understanding this paradox is crucial for investors. It underscores that the drop in total demand is not indicative of a weakening market, but rather a recalibration. The high industrial demand and constrained supply create a unique environment where silver's fundamentals remain strong despite the overall numbers showing a temporary decline. This paradox positions silver for potential significant gains as the market adjusts and continues to grow, driven by its indispensable role in key industries.
What everybody thinks. The fascinating thing is that, yes, we know silver is an industrial metal. It is priced as such. When you've got a gold-silver ratio, I'm looking at my screen, of 73 times, that is not pricing it as money. But it does respond with gold as if it was a junior form of money. So, it hasn't gone totally. What is so interesting, I find, is the complete lack of interest in Western capital markets about silver and gold, while at the same time, there is enormous demand, obviously building up in Asia and particularly China. Silver has, if you like, an additional factor driving it. One is that India is now expanding its economy quite rapidly in the direction of photovoltaic cells and similar, if you like, environmental manufacturing activities. And I'm sure that major Indian corporations like Reliance Industries have been cleaning out COMEX vaults. The amount of silver that's been stood for delivery is really quite dramatic, particularly when you bear in mind that the futures market is not meant to be a delivery market at all. The only reason that you have a delivery facility is basically to notionally tie the future to the price on expiry. So that is interesting. But I think for both gold and silver, it's worth understanding the position of the Chinese. Just look at Chinese households. Chinese households save roughly 35% of their income. That is huge. It is enormous. And given the size of the economy, which in US dollar terms is roughly $18.3 trillion in GDP, 35% of that is about $6 trillion. Now, $6 trillion of savings, where does it go? Well, if you look at property, that's yesterday's story. After Evergrande went bust and all the rest of it, all those problems. And you can see that the amount of land now being developed, it's just fallen off a cliff. There is no demand for property in China now, residential property. So that's gone out of the window. Stock market, well, for the last 3 years, it's been a pretty poor deal. It's gone down. It's gone up this year, really, since about January the 1st. It's up about 8-9%, something like that. But, if you're an investor, if you're a saver in China, you've probably got in your mind the fact that you've lost a lot of money, or you would have lost a lot of money if you'd bought equities over the last 3 years.
Investment demand plays a pivotal role in the silver market and has the potential to significantly influence prices. Despite the overall decline in 2023, the outlook for silver investment is quite bullish, and here's why. Firstly, let's talk about physical silver investment. In 2022, we saw an unprecedented surge in demand, with investors buying up 333 million ounces of physical silver. This was a record-breaking year. However, in 2023, physical investment dropped to around 263 million ounces. While this 70 million ounce drop seems substantial, it's important to remember that 2022 was an outlier with extraordinarily high demand. The current levels, though lower than the peak, are still historically significant and robust. Moving forward, many experts, including Peter Croft, expect a resurgence in investment demand. Croft predicts that net physical investment in silver could rise significantly in 2024, potentially reaching between 282 and 290 million ounces. This uptick would be driven by a combination of market volatility, economic uncertainty, and the appeal of silver as a safe haven asset. Exchange-traded funds, ETFs, also play a crucial role in silver investment. ETFs provide a convenient way for investors to gain exposure to silver without having to deal with the logistics of physical storage. In 2023, ETFs saw a bit of a mixed performance, but the outlook for 2024 suggests a potential rebound. As interest rates stabilize and potentially decrease, and as inflation fears persist, we can expect to see renewed interest in silver ETFs. Another factor bolstering investment demand is the ongoing uncertainty in global financial markets. With stock markets experiencing volatility and economic indicators sending mixed signals, investors are looking for assets that can provide stability and hedge against inflation. Silver, with its dual role as both an industrial and a monetary metal, fits this bill perfectly. Moreover, as geopolitical tensions continue to simmer, silver's status as a safe haven becomes even more attractive. Investors around the world are increasingly viewing silver as a critical component of their diversified portfolios. The demand for physical silver and ETFs is expected to surge as more people seek to protect their wealth from economic turbulence. In summary, the role of investment demand in the silver market cannot be overstated. Despite a temporary dip in 2023, the future looks bright. With a potential rise in physical investment and a rebound in ETF interest, combined with ongoing market uncertainties, silver is poised to shine as a key investment asset. This growing investment demand will be a significant driver of silver prices in the coming years.
They don't want any more government debt, that's for sure. So the question then is, what level of interest rates, what level of bond yields will be required to stop foreigners liquidating their dollar positions? I don't have an answer to that. I mean, how high? I don't know. This could go on and on and on. We had a similar situation in sterling back in 1976 when we had to get the IMF in to support sterling. Interest rates, I can remember the launch, and I've said this before, launch of Treasury 15.5s of 1998. A 15.5% coupon on a long, I think that was a 12 or 15-year bond. Just imagine what that does to US government finances. we've got something like 130% debt to GDP. It's completely untenable. I mean, these political policies, and the politicians seem totally unaware of the dangers that they're creating for themselves. They are destroying the dollar. They are destroying financial markets. And, if you're going to see bond yields rising under that sort of pressure, forget equities. I mean, they are going to collapse. I can remember we had, by the end of 1975, the FT30 index, which we didn't have FTSE 100 in those days, but the FT30 lost roughly 80% top to bottom in that bear market. This time round, will it stop there? I don't know. Anyone who thinks that holding on to equities is sort of, a real asset and it's an inflation hedge and all the rest of it, I'm afraid it's up for a very nasty shock, because the pricing of it will be based on interest rates and, bond yields, and they are going a lot higher. This whole idea that you're going to get lower interest rates I think that Jay Powell and his colleagues actually do have some inkling of this. They do understand that this is a problem. They're keeping very quiet about it for obvious reasons. But if I was in their shoes, I'd be terrified, because there's no persuading the political class that, how they should act.
Looking ahead, the industrial demand for silver is expected to remain a critical driver of its market value, especially given the projections for the next decade. Industrial applications already account for nearly 60% of total silver demand, and this is only expected to grow. The most significant factor here is the burgeoning solar energy sector. Silver's unique properties make it indispensable in the production of photovoltaic (PV) cells used in solar panels. As countries worldwide strive to meet their renewable energy targets, the demand for solar panels, and consequently silver, is set to increase substantially. A report by Oxford Economics for the Silver Institute projects that the demand for silver in solar applications will rise by 30% over the next decade. This sector alone could consume an additional 190 million ounces annually by 2033. Electric vehicles, EVs, also present a massive growth area. Each EV uses significantly more silver than traditional vehicles, primarily in their electrical control systems and batteries. With global EV sales expected to increase rapidly, driven by both consumer demand and government mandates for cleaner transportation, the automotive sector's silver demand is projected to climb steadily. Moreover, the electronics industry continues to be a major consumer of silver. From smartphones and laptops to the infrastructure for 5G networks, silver's high conductivity and durability make it essential. The ongoing advancements in technology and the proliferation of electronic devices mean that this demand will likely keep growing. Beyond these specific sectors, there are also emerging technologies that could further boost silver's industrial demand. Innovations in areas such as medical devices, water purification systems, and advanced manufacturing techniques all rely on silver's unique properties. As these technologies develop and become more widespread, they will add another layer of demand for this versatile metal. It's also worth noting that industrial demand for silver tends to be less price-sensitive than investment demand. Industries that require silver often have few or no substitutes, meaning they will continue to purchase silver even if prices rise. This inelastic demand supports higher prices and adds stability to the market. In summary, the long-term outlook for silver's industrial demand is exceptionally strong. The ongoing expansion of the solar energy and EV sectors, combined with the ubiquitous use of silver in electronics and emerging technologies, ensures that industrial demand will remain a solid pillar supporting silver prices. This robust industrial demand, coupled with constrained supply, sets the stage for a potentially significant appreciation in silver's market value over the coming years.
Conspiracy theorists and all the rest of it think, that they've got it in for us. They're taking away our freedom and all the rest of it. It's the sort of slightly wrong order of events. They're messing things up. And the response, if you like, is that they need to retain control. And it's then that we start losing freedom. It's not a deliberate plan to take our freedom away at the outset, if you see what I mean. It's circumstances that have driven the authorities in that direction. Now, having said that, it's now gone, I think, beyond that simple which is the order of events type story, to one where increasingly politicians around the world and the leaders of big industries are getting together to try and find solutions. And this, of course, is World Economic Forum type stuff. We face an election here, a general election in next month, in July. Just looking at what the Labour Party, the leader of the Labour Party, Sir Keir Starmer, looking at what he's saying, looking at what he is, he's a sort of World Economic Forum robot. And I can see that if Labour get elected, I can see the direction in which he's going to take this country. I'm not saying that the incumbent Conservatives are all that much better. I don't think they quite realise either, but at least people like Rishi Sunak do understand the need for sovereignty. For this country to have its own rules, regulations, sovereignty, and all the rest of it. He gets that. But, the Keir Starmers of this world don't get it. And I'm afraid around the world, we have a lot of leaders, and I would put Biden into this camp, who think that, the problems can be resolved by getting together on an international forum to resolve them. And that inevitably leads to even less freedom for individuals.
While silver's industrial demand is strong, we must also consider how economic slowdowns or recessions might impact this demand. Historically, recessions tend to reduce industrial output, which could, in turn, affect the demand for silver in sectors like manufacturing, electronics, and automotive. However, silver is somewhat unique among industrial metals because it also has a significant role as a monetary metal. This dual role can create a complex but potentially beneficial situation for silver during economic downturns. During recessions, while industrial demand might dip temporarily, investment demand for silver often rises. This is because investors seek safe haven assets to protect their wealth in times of economic uncertainty. Silver, like gold, has a long history of being used as a store of value. When economic conditions worsen, the demand for silver coins, bars, and ETFs typically increases as investors look to hedge against inflation and currency devaluation. Moreover, the green technology sector, particularly solar energy and electric vehicles, might be less affected by economic slowdowns compared to other industries. Governments around the world are committed to reducing carbon emissions and achieving renewable energy targets. This means that investments in green technologies are likely to continue even during recessions, supported by policy measures and subsidies. As a result, the demand for silver in these sectors could remain robust even if the broader economy is struggling. Peter Croft points out that while a recession might lead to some softness in industrial demand, the overall long-term trend for silver remains positive. He expects a recovery in demand for jewelry and silverware in Asia, especially in regions like Southeast Asia, where silver is still seen as a form of money and a valuable asset. Countries like Bangladesh and Sri Lanka continue to accumulate silver, which supports its demand. Additionally, central bank policies during recessions can have a significant impact on silver prices. In response to economic slowdowns, central banks often lower interest rates and implement quantitative easing measures to stimulate the economy. These actions can lead to a weaker currency and higher inflation expectations, both of which are supportive of higher silver prices. In conclusion, while recessions and economic slowdowns might temporarily affect industrial demand for silver, the metal's dual role as an industrial and monetary asset provides a hedge. Increased investment demand and continued growth in the green technology sector can offset any declines in industrial use. This unique position makes silver a resilient asset that can perform well even in challenging economic conditions.
Absolutely. And I wouldn't rule out the possibility that this drives COMEX into a force majeure situation on the silver contract. Before they do that, they will probably raise the the margins 2 or 3 times. But the performance on these contracts is bizarre, if you like, from the bullion bank's point of view. I was looking at the gold contract, and yesterday I think I'm right in saying that you had a small rise in the price of gold. The reason I'm looking away is I'm just trying to find the information. A small rise in the price of gold, but guess what? the outstanding interest fell by 12,500 contracts. Now, this tells me that this is a bear squeeze, even though gold is close to all-time highs. I mean, this is bizarre. In other words, the bullion banking system has been caught with its pants down. This is something which I think could well develop into a crisis for one or more of these bullion banks.
Central bank policies are a crucial factor influencing silver prices, especially in the current economic climate. ALISDAIR MACLEOD, a respected financial analyst and former banker, provides deep insights into how these policies can shape the silver market. MACLEOD points out that the Federal Reserve's actions are particularly significant. In recent years, the Fed has been caught between managing inflation and supporting economic growth. During periods of economic slowdown or recession, the Fed often lowers interest rates and implements quantitative easing, QE, to stimulate the economy. These measures increase the money supply and can lead to a weaker dollar, which historically boosts silver prices as investors seek assets that hold their value. According to MACLEOD, the current and anticipated future actions of the Fed are likely to be very supportive of silver. With the U.S. economy facing potential slowdowns and uncertainties, the Fed is expected to maintain or even increase its accommodative stance. This means continued low interest rates and possibly more QE, both of which are bullish for silver. MACLEOD also highlights the broader implications of these policies. A weaker dollar, driven by the Fed's monetary actions, makes silver more attractive not just in the U.S. but globally. As the dollar depreciates, foreign investors look to silver as a safe haven, further driving up demand and prices. Additionally, MACLEOD emphasizes the importance of central bank gold purchases, which indirectly support silver. Central banks around the world, including those in China and Russia, have been increasing their gold reserves as a hedge against dollar depreciation and geopolitical risks. This trend, as noted by other analysts like Peter Cruft, strengthens the overall precious metals market. Since silver often follows gold, increased gold demand and rising prices can lead to higher silver prices as well. Prominent figures like Cruft and analysts at JP Morgan and BMO Capital Markets echo MACLEOD's views, expecting significant appreciation in silver prices due to central bank policies and economic conditions. JP Morgan, for instance, predicts that silver could reach $26 per ounce by mid-2024, with potential to hit $30 by 2025. This outlook is based on the anticipated continuation of low interest rates and increased investment demand as economic uncertainties persist. Furthermore, MACLEOD points out the potential for de-dollarization, where countries move away from the dollar for international trade and reserves. This shift can lead to increased demand for alternative assets like silver and gold. As nations diversify their reserves, silver stands to benefit significantly. In summary, ALISDAIR MACLEOD's analysis underscores the critical role of central bank policies in shaping the silver market. The Fed's accommodative stance, combined with global central bank gold purchases and de-dollarization trends, sets a very bullish backdrop for silver. These factors, alongside the industrial and investment demand drivers we discussed, create a compelling case for a substantial rise in silver prices in the near future.
Up to half of that was out on lease. In other words, there were two owners of it. Now, I'm pretty sure that, certainly for the last 20 years, the Bank of England, when it has leased gold, has retained it in its vaults rather than let it go out of its control. In other words, leased gold then becomes an asset which someone can then use, if you like, as a basis for extending credit. But it's never delivered. This is the important point. So, it's a sham in a sense. But the Bank of England, I think, has been getting away with it. I don't think it's the case, however, with the US Treasury. And we saw evidence that this might be a problem when Germany just wanted a small part of her gold repatriated. We also see, and this is anecdotal evidence, that every time a regime is destabilized by the US, like Libya or Ukraine or whatever, the Black Hawk helicopters come in and, sort of people who who look like special forces go and nab the gold and fly off with it. So, what's going on? I mean, it seems to me that there is a deficiency of gold in US government's hands. And when this, as the price of gold rises, this just brings greater and greater pressure on the US government. I mean, like huge pressure. It's going to be, I think, we're looking at potentially some sort of crisis as this becomes known, if you like. And it will become known at some stage. But of course, China and Russia have been doing exactly the opposite thing. They are now the two largest nations by mining output. Russia just recently, but China for a considerable time. China has also, by my estimations, as a government, the People's Bank has, not the People's Bank, sorry, the People's Government, the Communist Party has accumulated over 30,000 tons, which are not on the central bank's balance sheet. And I'm informed by sources who I have found to be generally reliable that the Russians have probably got a further 10,000 tons of gold, which doesn't show on their central bank's balance sheets because they've got two wealth funds which hold this gold, and they could well be tucked away elsewhere. So, the Asian hegemons are wholly prepared for a collapse of dollar-based credit. They have insulated themselves against this possibility, stroke likelihood, stroke certainty. And yet America, I think, and Britain, and I look at Canada, has got none at all now, sold all their gold. We're sitting here without the cover necessary. How are we going to respond to this? And I think the first sign of trouble could well be not too far away if gold and silver.
Silver and gold have long been compared as precious metals with both industrial and monetary uses, but their market dynamics are unique. Understanding these differences is crucial for investors looking to capitalize on the potential price movements of silver. ALISDAIR MACLEOD and other experts often emphasize that while both metals are safe haven assets, silver has a higher beta compared to gold, meaning it tends to be more volatile and can offer greater returns in bullish markets. This is due to several factors. Market size and liquidity. The silver market is smaller than the gold market, which means that it takes less capital to move silver prices significantly. This smaller market size contributes to silver's higher volatility, but also means that during periods of high demand, silver can outperform gold. Industrial demand. Silver's industrial applications are much broader than gold's. As we've discussed, silver is critical in the production of solar panels, electric vehicles, and various electronic devices. This industrial demand provides a strong foundation for silver prices, especially as green technologies continue to expand. Gold, on the other hand, is used less in industry and more as a pure investment and monetary metal. Historical performance. Historically, silver has shown to be more reactive to economic changes than gold. During times of economic growth and increasing industrial activity, silver often sees greater price increases. For example, during the 2011 commodities boom, silver prices nearly tripled, while gold prices doubled. This pattern suggests that in a recovering economy with strong industrial demand, silver could see substantial gains. Price ratios. The gold to silver ratio, which measures how many ounces of silver it takes to buy an ounce of gold, is an important indicator. Historically, this ratio has averaged around 60 to 70, but it can fluctuate significantly. When the ratio is high, it suggests that silver is undervalued relative to gold, presenting a potential buying opportunity. Currently, the ratio is around 73, indicating that silver may be undervalued compared to gold. Investment demand. Both metals see investment demand during times of economic uncertainty, but silver's dual role as an industrial and monetary metal can attract a wider range of investors. During market turbulence, investors flock to gold for its stability, but they also turn to silver for its potential for higher returns. As MacLeod points out, silver's lower price point compared to gold makes it more accessible to a broader range of investors, further supporting its demand. Peter Croft, an analyst at JP Morgan and BMO Capital Markets, also highlight that silver's performance is closely tied to gold's due to their historical correlation. When gold prices rise, silver typically follows, but often with amplified gains. This relationship is crucial for investors to monitor, as movements in the gold market can signal potential shifts in silver prices. In conclusion, while both silver and gold are valuable investments, silver offers a unique combination of industrial demand and investment potential. Its smaller market size and higher volatility can lead to greater price movements, particularly in a bullish market environment. By understanding these dynamics and the historical gold-to-silver ratio, investors can better position themselves to capitalize on silver's potential upside, especially in the context of the current economic and industrial landscape.
To escape from where they are. And I am sure in my own mind that this is the thinking behind CBDCs. Where and this was actually said by Augustine Carsten, the head of the Bank of International Settlements, which has been sort of coordinating all the sort of research efforts and all the rest of it into this. CBDCs will allow a central bank to direct credit in directions which it believes will benefit the economy. In other words, with CBDCs, we're moving towards a situation where the government decides how the economy runs, not industry. And they are working with industry in order to achieve that objective. So this is, as far as I'm concerned, the quicker we have a real crisis to stop this drift away from free markets and from personal freedom and all the rest of it, the better. We won't get it immediately, obviously. When things get really bad, you're then into, if you like, the sort of Hayek territory, if you like, of, are we going to get a leader who is a strong man and turns out to be a Hitler? Which was the road to serfdom. We don't know. But the one thing is for sure that I think that the authorities, if I can put that in inverted commas, are worried about the situation. And the escape that which they see is even greater, damping down on our activities in order to save the system, if you like. So this will involve even greater restrictions on freedom. And returning to Keir Starmer, effectively it's communism. Or fascism, probably fascism rather than communism, actually, because the involvement of big business turns it into a fascist socialist solution rather than, if you like, a communist socialist solution. So, answer your question is, the order of events, I think, started out in an understandable direction, but it's now got so bad that actually, whether loss of freedom is cause or effect is actually immaterial. I think it's going to get worse from where we are. And of course, the other problem that we have is that we've all got ourselves into wars which we can't win. How's that going to play out in an election year? This is
global trade dynamics and geopolitical factors play a crucial role in the silver market, influencing both supply and demand. ALISDAIR MACLEOD emphasizes that the geopolitical landscape, particularly the tension between major economies like the US and China, can significantly impact silver prices. Trade tensions, such as the tariffs imposed by the US on Chinese imports, including high-tech products and electric vehicle batteries, create uncertainties that ripple through global markets. These tariffs not only affect the flow of goods but also have broader economic implications, potentially slowing down industrial production and trade. For silver, this could mean fluctuations in industrial demand, especially since China is a major player in the production and consumption of silver-intensive technologies like solar panels and electronics. Moreover, geopolitical instability can lead to increased safe haven investment demand for precious metals. Investors often turn to silver and gold during times of political and economic uncertainty to hedge against potential market volatility. This was evident during the trade wars between the US and China, where both silver and gold saw increased demand as investors sought to protect their assets from the uncertainty surrounding international trade policies. Another critical factor is the strategic accumulation of precious metals by central banks and sovereign wealth funds, particularly in countries looking to reduce their dependence on the US dollar. MacLeod notes that nations like China and Russia have been significantly increasing their gold reserves, and this trend can extend to silver. This de-dollarization effort is part of a broader strategy to diversify reserves and protect against dollar volatility. As these countries build their reserves, they also influence the broader market dynamics for precious metals, supporting higher prices. Furthermore, economic policies and stimulus measures by central banks, especially in response to global economic slowdowns, can lead to a weaker dollar and higher inflation expectations. These conditions are typically favorable for silver. For instance, if the Federal Reserve continues with low interest rates and quantitative easing, the resulting dollar weakness can drive up silver prices as investors seek assets that hold value better than fiat currencies. Investment banks like JP Morgan and BMO Capital Markets project significant appreciation for silver in the coming years, based on these geopolitical and economic trends. They anticipate that lower interest rates, rising industrial demand, and renewed investor interest will all contribute to a strong silver market. JP Morgan expects silver prices to reach $26 per ounce by mid-2024, with the potential to hit $30 by 2025, driven by these underlying factors. In summary, the interplay between global trade policies, geopolitical tensions, and central bank actions creates a complex environment for the silver market. ALISDAIR MACLEOD's insights highlight how these elements can drive both industrial and investment demand for silver, positioning it for potentially significant price increases. Understanding these geopolitical and economic influences is essential for investors looking to navigate the silver market effectively.
Americans' heads that gold is no longer part of the monetary system. The dollar has replaced it. And it's also been driven into the heads of everybody who would call themselves allies of America. We now accept the dollar is money. And gold is a pet rock or whatever. The gold standard was a barbaric relic, as Keynes put it, before all this. It does actually leave American citizens very, very exposed, I'm afraid, because it is propaganda, no more than that. The legal position is quite simple. It has always been that gold is money and the rest is credit. And it doesn't matter what propaganda you've had drummed into your head over the last 50 years. The law is the law. It's as simple as that. And the reason it works as a law is twofold. Firstly, it's behind everybody else's legal position. So it is truly international. It takes the nationality out of credit. The second reason behind this is that it is always credit which circulates, not money itself. Money is there to secure the value of credit. And if you detach credit from money, then it starts losing value. And you can see this reflected, if you like, in the move of the dollar, from $35 an ounce in 1970, 71, to currently nearly 2,400. Put it the other way around, and what you're looking at is the dollar has lost over 98.5% of its purchasing power in 50 years, measured in gold. And gold is the standard. This is not Bitcoin, which is going up and up and up and up because it's being driven by speculative demand. This is real money. Its purchasing power is relatively constant. It's relatively constant in the sense that it can maybe double or halve against certain commodities over a period of time. But that's very different from losing 98.5% of its value. Very, very different. We're going to go back to understanding that gold is money. The other thing I would mention is that I do think that the US government has got itself into a virtually impossible position, because not only does it state that it's got 8,132 tons of gold in its vaults, but also it acts as custodian for earmarked gold for other nations. Now, there was a fellow called, I'm trying to think, Frank Venerosa, who did some research into the leasing of gold in the 1990s. And he concluded that anything between 10 and 14,000 tons of gold, the 14,000 tons was roughly half the total central bank declared ownership of gold.
ALISDAIR MACLEOD provides a wealth of insights into the current state of the silver market, drawing from his extensive experience and deep understanding of global economic trends. One of MACLEOD's key points is the critical supply deficit in the silver market. He highlights that despite the drop in overall demand in 2023, the deficit remains significant, driven by high industrial consumption and inadequate supply growth. MacLeod points out that the structural issues in silver supply are not easily resolved. Mining production is constrained, and new projects face numerous hurdles, from funding challenges to regulatory approvals. Recycling, which could alleviate some of the supply pressure, is also not expected to increase substantially due to economic and logistical barriers. This persistent supply shortfall creates a strong foundation for higher silver prices as demand continues to rise, especially from industrial applications. Peter Croft, another respected analyst, complements MacLeod's views by emphasizing the robust long-term demand for silver. Croft notes that even with the potential economic slowdown, sectors like solar energy and electric vehicles will continue to drive significant silver consumption. He predicts a notable recovery in physical investment demand, projecting it to rise to 282 to 290 million ounces in 2024. This resurgence, according to Croft, will be bolstered by investor interest in silver as a hedge against economic instability and inflation. Analysts at JP Morgan and BMO Capital Markets also align with these optimistic projections. JP Morgan forecasts that silver prices could reach $26 per ounce by mid-2024 and potentially $30 by 2025. This outlook is based on expectations of sustained industrial demand, particularly from green technologies, and a favorable macroeconomic environment marked by low interest rates and a weaker dollar. BMO Capital Markets similarly sees silver benefiting from broader trends in commodities and the increasing role of renewable energy. MacLeod also underscores the impact of geopolitical factors. He discusses how ongoing trade tensions and the strategic accumulation of precious metals by central banks, particularly in China and Russia, support higher silver prices. These countries are actively diversifying their reserves away from the US dollar, and their increasing gold holdings are likely to extend to silver as well. This shift is part of a broader de-dollarization trend that could have significant implications for global financial markets. Furthermore, MacLeod emphasizes the role of central bank policies in shaping the silver market. The Federal Reserve's monetary stance, particularly its approach to interest rates and quantitative easing, is crucial. A weaker dollar resulting from these policies tends to boost silver prices as investors seek alternatives to fiat currencies. MacLeod suggests that the Fed's actions in the coming months will be pivotal, especially if they lead to lower interest rates and increased liquidity in the market. In conclusion, expert insights, particularly from ALISDAIR MACLEOD, provide a comprehensive understanding of the silver market's current dynamics. The combination of a significant supply deficit, robust industrial demand, strategic geopolitical shifts, and supportive central bank policies all point towards a bullish outlook for silver. Investors and analysts alike see substantial potential for price increases driven by these multifaceted factors.
And the expanded and to be further expanded BRICS, and they are looking to do without the dollar as much as possible. Now, it's very hard to see that commodities can be priced in anything else. We've always had them priced in dollars or sterling or something, most of the time backed by gold, so that, effectively they were priced in gold. The problem, I think, as far as they're concerned, is that, we've now got, with these nations who are rapidly industrializing, the majority of the world's population, GDP on a purchasing power parity basis is probably 35–40% of global GDP. So this is growing. And it means that, we're beginning to find ourselves in a bit of a minority on almost any economic measure, certainly in terms of population, certainly in terms of growth prospects and industrialization. And to go back to an earlier point when we were talking about China, I think that she is actually quite well on the way, probably further on the way, to switching the direction of her economy to supplying cheap goods to America, to Europe, to wherever, towards investing in infrastructure in Asia to develop those markets. And that is something which, you've got meetings going on as we speak in Astana, which is, sort of southern Russia somewhere, involving, BRICS and the plans and all the rest of it. So these are changes which are now happening. I think that central to replacing the dollar is the problem of what currencies do we use? And at the moment, they just don't seem to have a complete answer. What they are saying, I think, is that we will use national currencies. But then there is a further point which isn't really mentioned, and that is it's all very well using national currencies. You can use that maybe to measure trade imports, trade exports, and all the rest of it. But underlying this, there is a balance. So if you take the situation, say, a simple one between China and Saudi Arabia.
As we analyze the various factors driving silver prices, it's clear that this precious metal has significant potential for appreciation. But what does this mean for you as an investor? Now is the perfect time to consider silver as a strategic addition to your investment portfolio. Whether you are looking for a hedge against economic uncertainty, a way to benefit from the green technology boom, or simply seeking to diversify your assets, silver offers a unique combination of benefits. Imagine being part of a future where silver prices soar, driven by robust industrial demand and constrained supply. Picture yourself securing your wealth with an asset that has stood the test of time, providing stability and growth even in turbulent markets. This is not just about investing in a commodity, it's about positioning yourself for long-term success. If you're intrigued by the potential of silver, make sure to subscribe to our channel. We dive deep into market trends, provide expert insights, and keep you updated on the latest developments. By subscribing, you'll stay ahead of the curve and be the first to know about emerging opportunities in the silver market. But we want to hear from you too. What do you think about the future of silver? Are you considering adding silver to your investment portfolio? Drop your thoughts in the comments below and join the conversation. Your insights and questions are invaluable to us and help create a dynamic community of informed investors. As we continue to explore the exciting prospects of the silver market, we'll keep you informed with detailed analysis and expert perspectives. Don't miss out on the chance to capitalize on one of the most promising investment opportunities of our time. Subscribe, comment, and stay tuned for more in-depth discussions on how you can make the most of the silver surge.
I mean, interestingly, I was called in to advise a central bank in Europe a bit over a month ago on these matters. And I pointed out to them the dynamics leading to higher interest rates. They didn't disagree with what I said, but you could see that they were concerned, very concerned about what happened, what the consequences would be, particularly because in this country, which should remain nameless, there's the government finances actually look pretty good on paper, a lot better than ours, a lot better than yours. But the problem is that the private sector has enormous debt, and this debt is in the form of mortgage debt. And if you get higher interest rates, it's just absolutely going to bankrupt individuals, the banking system, the mortgage companies, the whole thing. That was what worries them. I talked to these, and this is at a high level. I mean, we're talking at board level. I talked to them about this and said, are the politicians, cognizant of the danger of having such high leverage in the property market, and are they prepared to do anything about it? And I was told that the last thing that they were prepared to do was to free up the rental market, which of course would make, the reason people are having to buy properties at such high leverage is because there's no rental market. You're either out in the street or you pay a hell of a whack in order to buy a house or an apartment. But politically, it's an absolute no-no because landlords are evil. I don't know, whatever the logic is. It's a socialist logic. We have it in the Labour Party in this country. We actually have it in the Conservatives to a degree as well, though, the message there is a bit mixed. It's the political class which refuses to do anything. And this is why the whole thing is going to be crisis first, solution second. The politicians actually have to have their backs up against the wall before they will actually address these issues. So I do feel that the central bankers, these are not people I would automatically express, sort of support for. Let's put it that way. But I do feel that they are in a real bind. And the problem, I think, is really with the politicians more than the central bankers at this moment. I know that most of the viewers to your channel will say, well, the central bankers have messed up the whole thing. Yes, they have. Of course they have. And they don't know what they're doing. They bought the Keynesian line. They don't actually understand how free markets work and all the rest of it. But they've now got themselves into that end point from which there is no escape. And they turn around to the politicians and say, well, the only thing you can do is A, B, and C. And the politicians look at them and say, you must be kidding.
As we have seen throughout this analysis, silver's market dynamics are incredibly promising. The combination of high industrial demand, particularly from green technologies, constrained supply, and supportive central bank policies, creates a compelling case for silver's price potential. ALISDAIR MacLeod's insights, along with other experts, paint a clear picture of why silver is poised for significant appreciation. Now let's talk about what you can do to take advantage of this opportunity. If you're not already invested in silver, consider exploring different ways to add it to your portfolio. Physical silver, such as coins and bars, is a solid choice for those who prefer tangible assets. Alternatively, silver ETFs offer a convenient way to gain exposure to silver without the need for physical storage. As you think about your investment strategy, remember the unique position of silver. Its dual role as both an industrial and monetary metal provides a hedge against economic uncertainty, while offering the potential for substantial returns driven by technological advancements and geopolitical shifts. We strongly encourage you to subscribe to our channel for ongoing insights and updates on the silver market. By subscribing, you'll be the first to know about new developments and strategic opportunities. Our goal is to keep you informed and prepared to make the best investment decisions possible. Before we wrap up, we'd love to hear your thoughts. What are your views on the future of silver? Are you planning to invest, or do you have any questions about how to get started? Share your thoughts in the comments below. Your participation helps us create a vibrant and knowledgeable community. And don't forget, by subscribing, you ensure you won't miss our upcoming videos where we'll dive deeper into specific investment strategies and market forecasts. Stay with us as we explore the full potential of silver and other promising investment opportunities.
China buys oil from the Saudis. But what China then does is it invests in infrastructure in Saudi Arabia. And so I think that, what we're looking at is not so much trade deficits and surpluses. What we're looking at is the maintenance, if you like, of a balance of payments between all the trading partners. That is the way it's going to be done. And where gold will come in is where there is a balance, unspoken for in the balance of trade between more than one party. Then they have got the option either to take one other's currency or to take Chinese currency or to use gold. And I think that's the way in which that is going. China doesn't want to be seen, if you like, as destroying the Western capitalist system. And so what she is doing is she is sitting back, if you like, on any idea that she's going to put the yuan onto a gold standard, because that would destroy the dollar in pretty short order. India is in a similar situation, and India is more reliant in many ways for her growth on Western markets. So, you've got actually quite a pushback against the idea that the two, the Asian nations are going to go on to a gold standard. I think the hole in this argument is Russia, because the more we put pressure on Russia, the more Russia, I think, will take economic action or take financial action against the West. It could very, very quickly destroy the dollar simply by putting the ruble onto a gold standard. The reason it hasn't done that, I think, is because of its partnership with China. And also with Iran to a large extent. I think the Saudis would be quite happy to go on to a gold standard because they share the similar objectives of trying to stabilize the value of their oil, their oil exports and oil reserves. So, so it's interesting. The more pressure that we put on Russia, we're forcing her to choose either this becomes an outright war as opposed to a hybrid war, or it's a financial war.
As we've explored, silver is positioned to experience significant price increases due to a perfect storm of factors. But how exactly could all these circumstances lead to silver's price soaring to unprecedented levels? Let's break it down. Firstly, the industrial demand for silver, driven by its essential role in green technologies like solar panels and electric vehicles, continues to grow at a rapid pace. These sectors are not just trends, they are the future. Governments worldwide are committed to renewable energy and electric vehicles, ensuring a steady and increasing demand for silver for years to come. With countries like China and India leading the charge in solar energy deployment, the demand from these industries is set to rise significantly. On the supply side, the constraints are clear. Silver mining is facing numerous challenges, from declining ore grades to stringent regulatory requirements and geopolitical risks in key mining regions. These factors mean that supply is not only struggling to keep up with current demand, but is also unlikely to ramp up significantly in the near future. Recycling efforts, while helpful, cannot bridge this gap, leaving a substantial deficit that supports higher prices. Investment demand adds another layer of strength to silver's outlook. As economic uncertainties persist, driven by market volatility, geopolitical tensions, and central bank policies, investors are increasingly turning to silver as a safe haven asset. The dual nature of silver, as both an industrial metal and a store of value, makes it uniquely attractive. ALISDAIR MACLEOD and other experts anticipate a significant uptick in physical silver investment and ETF holdings, further driving up demand. Central bank policies, particularly those of the Federal Reserve, play a crucial role, with interest rates expected to remain low and possibly decrease, and with continued quantitative easing, the dollar is likely to weaken. A weaker dollar historically boosts silver prices as investors seek assets that maintain their value better than fiat currencies. The strategic accumulation of precious metals by central banks, especially in countries like China and Russia, also supports this trend. Moreover, the broader economic landscape is shifting. De-dollarization efforts, where countries reduce their reliance on the US dollar for trade and reserves, are gaining momentum. This shift could significantly impact global financial markets and enhance the appeal of silver and gold as alternative reserves. In conclusion, all these factors converge to create an exceptionally bullish environment for silver. The constrained supply, rising industrial demand, robust investment interest, and supportive central bank policies collectively set the stage for silver prices to soar. ALISDAIR MACLEOD's analysis, supported by insights from other prominent figures, paints a clear picture. Silver is not just poised for growth, it's on the brink of a significant breakout. Now is the time to pay attention to silver. Whether you're an experienced investor or just starting, understanding these dynamics and positioning yourself accordingly could yield substantial rewards. Don't miss out on this opportunity. Stay informed, stay invested, and watch as silver shines brighter than ever. Thank you for joining us in this deep dive into the silver market. If you found this analysis insightful, make sure to subscribe to our channel for more expert insights and updates. Share your thoughts and questions in the comments below, and let's continue this conversation. Remember, the future of silver is bright, and being informed is the key to making the most of it. See you in the next video, and happy investing. Disclaimer: this video is for informational purposes only and does not constitute financial or investment advice. Always do your own research and consult with a professional advisor before making any investment decisions.
All these banks, coincidentally, offer gold savings accounts. So if you've got a minimum of, say, 500 or 600 yuan, which is roughly $80, then you can open one of these accounts. Now, I don't know whether these big banks run their gold accounts on a fractional reserve basis, or whether they actually back it properly. But I would have thought that they're not going to get themselves into the same position, if you like, as their bullion bank cousins in the West. So, demand from customers switching from ordinary deposits into bank deposits, I would have thought, goes, pretty directly via the bank into gold. They also have apps in China. You've got these apps, and you can buy and sell gold on an app. I mean, we've got that sort of thing over here as well, but they've got it in China. Don't forget it. And from what I understand, very much unlike us, where we actually have very little interest in coins and bars. You have to be a bit die-hard to be interested. In China, they're queuing around the block to buy gold, jewelry and small bars and items like that. the big stores are literally selling out every day. So there is huge demand. And this is not necessarily reflected in the withdrawals from the Shanghai Gold Exchange, because the big banks, in accumulating gold on behalf of their customers, don't take it out of the Shanghai vaulting system. It remains in the vaulting system, so it's not effectively delivered. So there's a huge, great iceberg, if you like, of gold. We only see the tip of it in the form of deliveries actually accumulating on behalf of the Chinese people in the vaults. Now, to give you an idea as to what 35%, in other words, 6 trillion of savings actually buys in terms of gold, is the equivalent of about 75,000 tons of gold. Now, obviously there isn't the gold available, but now you can begin to see why the Chinese, who traditionally have always regarded gold and silver as money, are buying both gold and silver. And the problem with silver is that it is a very illiquid market. It is consumed. It is taken out of the vaults. If you look at the numbers from the Silver Institute, you see that the reserves, if you like, that are being drawn down are in, according to them, in the LBMA's vaulting system and also in COMEX. But, it's running out of the door. So the bullion banking cohort, if you like, in the West finds that they've got a problem. I mean, they're too used to running the market up and down to generate enormous trading profits, and quite happily run fairly large short positions in the process. But now they can't cover their positions. And we're seeing this very dramatically in the price of silver, more so than in gold, where there is actually greater liquidity. But I think that's the background really to what is going on in both gold and silver.